DraftKings jumped to a new 52-week high on Monday. Investors are keeping an eye on the sports betting company that's set to release its second quarter earnings in August. Let's bring in Yahoo Finance's Josh Schafer to give us the details. Hey, Josh.
Yeah, Rochelle, so it's been interesting to look at this rise in DraftKings we've seen this year. Shares up over 150% to start the year. So I went out and asked some analysts sort of what they're thinking, what's been so positive for DraftKings. And one thing that was interesting that was highlighted by Jed Kelly at Oppenheimer in a recent note, they actually boosted their price target from $30 up to $36 in that note. He highlighted New York market shares. There's a lot of state gambling data that we can gather, right? And if you take a look at the New York market share, that what you're looking at right now is handle. So that's the total amount that customers bet on a sports book. For the first time ever, that weekly handle was dominated by DraftKings over what's normally considered the industry leader, FanDuel. That just happened relatively recently. And really what's noteworthy there is when you take a look at the hold that DraftKings has been able to build up. So hold is how much sports books take home after they pay out winners and they pay out taxes. And so the actual money that they're getting back into their business. You see there DraftKings coming in at 9.4%, still below FanDuel, but above other industry competitors, showing that they're basically building out better, more accurate products, more attractive products where they can make more money off customers. Of course, when we're talking about businesses, that's always one of the biggest things to focus on. And then another thing that's been interesting to highlight, Rochelle, that Chad Beinon over at Macquarie was discussing with me is parlays. People combine these bets. So you can bet on more than one thing in a game. Say you bet on Patrick Mahomes to throw a touchdown pass, and you also bet on the Kansas City Chiefs to win the game. The odds for that are higher, so it's harder to win that bet, which means that the house wins more, and the house, DraftKings and FanDuel, are convincing more bettors to make those bets, those harder to make bets. And so they're able to make more money off customers as they make these same game parlays more popular, essentially, I don't want to say tricking us, but maybe convincing us that it might be more fun to try and get three things right in one game. And maybe me and you, Rochelle, aren't actually that good at getting three things right in one game, and then we end up losing instead of just betting on a winner or a loser. So that's been something that DraftKings has cited as positive to what they're seeing in their earnings.
And I want to ask, because a lot of people wonder, DraftKings, they were having all these promotional offers at the beginning to sort of get people on board. So are we seeing more of an end to that? Are they at a point now where they're comfortable and they have enough engagement where they can sort of pull back on that?
They have cut back on spending and promotional spending, and that's something that they've cited in recent earnings calls, and I'd expect to probably hear come August in the next earnings call as well, is basically with less states opening up. Remember, California did not pass their bill for sports gambling back in November. That would have been the biggest state to open yet. DraftKings is able to focus on states that already exist, and you don't have to promote as much in a state that already exists. So they're trying to make money off customers that they already sort of have in their system, and they're not spending as much, which is what's helping profitability. Analysts right now project that they're going to have their first quarterly positive EBITDA print ever since they've become a public company coming up in that second quarter earnings call. And I think part of that reason too, Rochelle, is just being able to, again, make more money off the customers they already have, so they don't need to promote more to get new customers in if they're giving more options. A lot of this has become about tech, and people believe DraftKings is one of the tech leaders. It can sort of get you the most options and get it to you the fastest so you can bet more times within a game. And of course, if you bet more times, it's like anything. You're buying more from the company, right? And transacting more. So they're able to make more money that way.
Well, it's certainly paying off.
Right.
Good stuff there. Thank you so much. Yahoo Finance's Josh Schafer there for us.